The AI boom has been Wall Street's biggest bet. This week, tech giants have to show the money. Results from Alphabet, Tesla, and Intel will test whether the AI rally has more room to run and whether billions in AI investment are starting to pay off. Jonathan, is this, to me, this does feel like the beginning of the big weeks where you really want to see how the market responds to CapEx guidance?
Yeah.
How do you think?
Well, and it's not even the numbers. It is the response. I mean, oftentimes you see companies come out with good earnings and then the stocks sell off anyway, the whole buy the rumor, sell the fact. What's been interesting to me is a lot of these big cap tech stocks are already underperforming. IBM is down almost 30% this year. Palantir, that was a huge AI play, that's down by over 20%. Oracle is down by 35%. So, it's almost like tech this year quietly has not been the place to be. It's been small cap. It's even been value stocks that are outperforming. So all eyes are on the Mag 7, but I think investors should avail themselves of other parts of the market that haven't yet participated like the Mag 7 has.
Dagan, he's right. I wanted to come to you on this. Apart from Apple, which is within 1% of its all-time high, all other Mag 7 names are down more than 10% from their 52-week peaks. Microsoft is down more than 29%. Clearly, that's the worst affected in terms of who's down the most from their sort of latest high in the last year. How do you think about this?
So, is Tesla still in the Mag 7?
I know. Yes.
But if you look at it this way, so these are the big hyperscalers: Alphabet, Amazon, Google, and Microsoft, and Meta. If they pull back on their infrastructure spend for whatever reason, say the growing pushback at the local level, let's dismiss the Democrats, but it's a slowdown because of the pushback in the data center build out. There is, they're raising more and more money. They're not having trouble raising money, but the signals are there. Their stocks are down. If they slow the spend, it could help their stocks, that it could attract buyers back. It's not good kind of downstream for the chip makers and the like. But you look at the move up in Micron today. So if there's a slight slowdown for the stocks, it might be good because it will give them a little bit of ballast. But we'll talk about it as the show moves on, what's going on in China and how that lines up with what's happening here in the United States in the AI race. And I think everyone is gravely concerned about the China getting a leg up and the U.S. government getting in our way.
Can I talk about China? Great chart, ugly for TV, so I'll verbate it and we'll put it out on social. The cost per index, according to Artificial Analysis, to run Claude Fable 5, they're putting it at $2.75. DeepSeek is 2 cents. So when you think about...
As a user.
Yeah. CTOs, CFOs... I'm not going to do cheap DeepSeek open source for everything. And I won't do it to save a couple pennies. But if I'm going to save $2.73 per token, well, yeah, I mean, because that adds up to millions, if not billions of dollars. How do you come down on the margin? Because we were having this debate last week that we cannot believe that corporations would do that after they outsourced their manufacturing to China, got all of their IP theft stolen, dismembered the American manufacturing sector, and now we're crying foul. Would they really repeat the same mistake again? I think you and I said, to beat the next quarterly earnings report, yeah, they might. How does all that make
Well, we think about the big earnings week, and Dagan is right. They need to start rationalizing spending. But the messaging around rationalizing spending isn't that we want to spend less to have our earnings grow. It needs to be, we think we've made these investments. These investments are strong. We're going to wait to see some of the returns so we know where to put our money. But that messaging really matters, because if we think about sending a message that says we're going to spend less, and you don't finish the sentence, people are going to think you're spending less because you have a problem. The product's not working, you're getting beat by somebody else. I thought a little bit.
I didn't say spend less. I said spend it less.
Rationalizing more.
Right.
Not 73 million an hour, which is what
Right.
it is today. I think the piece, Dagan, and I thought about it over the weekend when you corrected something that I said around American companies abandoning this just to save money. And I started thinking about my own self and putting things into a foreign government subsidized AI piece. And I started thinking, oh my gosh, they're going to learn everything. They're going to learn everything. They're going to beat what I'm doing. They're going to try to think about what I'm doing. They're going to triangulate things. They're going to share it with other people. Now I have fear. I have that same fear with some of the American companies, but I don't feel like they wake up every day thinking about doing that. Yeah. It's 2 cents because somebody's paying for it to be 2 cents.
Of course. Jackie, I think the good news in all of this is the market has started to broaden out. The equal weight S&P has continued to outperform the market cap weighted S&P. Consumer discretionary goods and transports have outperformed the S&P 500 by 12% in the last 2 months. So some of this momentum unwind that we got in all the chip makers last week is actually helping to broaden the rally. We're investing in Goldman Sachs and JP Morgan again.
I love it because to a point you've made before, it shows that there's strength in the underlying economy and that investors feel pretty solid about that. And frankly, as I watched the chip stocks and the Mag 7 and the hyperscalers just go up, 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 I wondered when people were going to take some profits. If I were invested in those names, I certainly wouldn't think the party was going to last forever. So I like seeing this diversity in people's trading strategies and that they believe that despite what's happening in AI, that AI wasn't holding this entire market up, and that expectations are strong going forward in general, because as we've got the backdrop of a war in Iran, I want to know that things are good at home here. But as I'm looking at the tech names and some of them set to, report, the big ones that you all mentioned, I'm also thinking about a company like IBM that pre-announced essentially and came out and said there has been a diversion of this spend because of infrastructure issues. And I'm thinking to myself about that specifically. I want to know more about that, not just from IBM, and I believe they're Wednesday after the bell, but from other companies too that maybe haven't made some comments to let us know how things are going, because I think investors are looking to see, this is still the question of which inning we're in this, and where do we go from here? Is this just like a little bit of a pullback, a momentary setback, or is this a larger issue to think about as we move forward? I think that when stocks come back like this, it's actually not a bad thing for those who took their profits. It could present a buying opportunity for others who want to get into the trade but weren't ready to do it at all-time highs. So this is exciting to me with respect to the information that's going to be coming in this week.
Can I just say one thing? It possibly could be, if history is any guide, that AI does take off, but a lot of the AI stocks actually underperform. That's what happened after 2000. The dot-com stocks, the technology stocks peaked in 2000. They didn't reclaim those highs until about 2013. So they underperformed for basically more than a decade. So, I think you have to, as Jackie correctly points out, you have to kind of cast a wide net as an investor these days. And for me, if every American could get no credit card debt and have 6 months worth of living expenses, that so-called emergency fund, most people don't have that. If they could just get that, they would be a huge leg up over almost everyone else in America.
Jonathan, how do you expect SpaceX to wait for their #1 acquisition target, Tesla's numbers, and what do you think you're going to see out of Tesla this week?
Well, I'm looking at SpaceX. This was the name that people paid, I think, in excess of $200 for a share just a couple of weeks ago. All-time lows. And, I always say, we think of as an all-time low as being the all-time low. It's usually just an all-time low. So it's a great example of how the market is just not preferencing a lot of the hot names that even a month or 2 months ago, it seemed like were the only traded.
Do you think Tesla's...
Go ahead.
Yeah, no, not a buyer of Tesla, not a buyer of SpaceX. Wonderful companies, incredible innovations. But again, if history is any guide, the internet took off, but Cisco, Intel, Sun Microsystems, and Oracle did not for over a decade.
What were you going to ask him? I interrupted.
How do you think Tesla's results are going to be, and does that feed into SpaceX? Because ultimately, I see those businesses coming together. What do you think you'll see out of Tesla is what I'm worried about.
Again, I'm looking at the reaction, not even so much the number. And big cap tech, I think, is in the danger zone right now. A lot of these names have come down much more than people would have expected. IBM, I think, had its worst day since the 1987 stock market crash. So lots of expectations. I think we're going to see, even if it's good numbers, once again, buy the rumor, sell the fact. But our viewers have to do their own due diligence when it comes to any stock.
When you compare the U.S. to China, Tesla is a very good example. China stole Tesla's tech, its IP. Elon Musk and the company went into China, put up manufacturing facilities, communist country, hired away all the people that in essence, Tesla trained, stole the tech. BYD is now the number one EV maker in the world. They just happen to not sell cars here because we throw up a barrier that BYD is not allowed to sell those cars here. But if we aren't careful, the same thing will happen to not just our AI tech, but all of our most valuable IP, because corporations are clamoring for these open weight models that are coming out. And one other thing, so Google is the first of the big companies that reports this week, isn't it? Alphabet. So Alphabet has historically realized a move of 3.86%. This is after it reports earnings, but after the last earnings call at the end of, for the quarter ending March, it went up almost 10%.
Wow.
So almost 10%, 9.96%.
What about the company that you and I own 10% of? That reports this week, right?
Yeah, it's going to be
Intel.
great.
And have made 4X.
Because we're going to demand that it's good.